Hi, and welcome to our special 3 and 3 Chart of the Week update. This is where I attempt to talk about 3 different charts in 3 minutes. This month, we're going to do a little bit something different where we're going to talk about 3 questions that clients are asking us. So let's jump right in. The first question is, why didn't I make money in 2018? Obviously, after a very long bull market, most people are used to making money. We did have losing years for the stock market in 2011. And again, 2015, if you were a diversified stock investor, but this was something new for them. The first chart is actually not a chart, it's a table, but it's a neat illustration of all the different ETF sectors to really graphically illustrate where you could have made money. The only place you could have made money last year was in cash. And so with that being said, you probably didn't start the year in cash, which means you most likely didn't make any money. The same is true for SEM's portfolios. If you scroll down a little bit, I have a little bit longer discussion to talk about ways we actually did make money and what happened with our portfolios throughout the year. So question number 2 is, what can I expect going forward for the markets? And this is quite simply the number one rule in investing. You want to buy low and you want to sell high. Well, the way you look at it is valuations. There's a company called GMO that uses all the data that says, based on the data and historical trends, this is what you should expect for the different asset classes. And unfortunately for investors, U.S. stocks and U.S. bonds are projected to lose money over the next 7 years on a buy and hold basis. That doesn't mean it's going to be a slow negative loss. What likely happens is, because you're at really high valuations, even after the losses in the market in the fourth quarter, that now you're at a place where valuations still are not very attractive, and you're likely to have a big drop in the market where valuations become attractive. So that brings us to chart number 3, which is, does the post-Christmas rally mean that the coast is clear for stocks? And this is a really neat chart, because I was told before I even started with SEM that the biggest rallies come during bear markets. Well, this is a perfect example of it. It shows every trading day during the last 2 bear markets, and it shows the drops followed by the pops. So the fact that the S&P 500 has rallied over 10% since Christmas doesn't mean the coast is clear. It doesn't mean we're in a bull market. What it does mean is we're probably in this very volatile stage that we're going to have to be extremely careful for. Again, scroll down. There's a lot more discussion on there, and we'll see you back next month for whatever we come up with for 3 and 3.